This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 27th, 2015. Our time is 8:41 Mountain. If you ever miss a radio show, the shows are streaming live, archived, on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. You can connect with us. Type in the World Financial Report on Radio. We are portable. Our radio show goes anywhere you do. We have a free weekly newsletter we send out, the companion to our radio show. You can be up to date on the financial markets for the week in about 5 to 10 minutes, or you can spend hours going through all the different stories that we have. You can find out more about our free weekly newsletter. Get your name on the list. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number, 1-800-432-1022 to speak personally and privately with Harold. 1-800-432-1022. rarecoloreddiamonds.com. A lot of people taking Harold up on his offer to speak with him about the current volatility in the markets. And it has been off the chart. Harold has been insanely busy taking your calls. This week, our featured diamond from rarecoloreddiamonds.com is a 1.30 carat cushion cut fancy light blue ring. It is gorgeous. See it at rarecoloreddiamonds.com, featured diamond of the week. It's a 1.30 carat cushion cut fancy light blue ring. We'll talk more about that and the diamond market a little later in the show. As we were saying, incredible volatility this week in the financial markets. China stock market continued to plunge. The government stepped in to manipulate the stock market from falling after it took a hit, and they have stabilized it for the time being. Now, the Dow was down 1,000 to open, and then it sort of stabilized and continued to be very erratic throughout the week. At some points, we were up 600 points. At other points, we were down 400, 500. It was a very chaotic week, and the same can be said for the TSX as well here in Canada. The oil market broke $40. The loonie was around 75 cents. The Saudis are looking to cut billions from their budgets due to the oil price fall. A lot of people wondering, will there be social unrest in a lot of countries that are pumping oil and doing it at a loss? The big question is, will the Fed in the United States raise rates in September because of all the volatility that's happening in the market? Most people feel it will not happen. The CBO, Congressional Budget Office in the United States, saying the debt in the United States in the long term, starting in 2018, unsustainable. Also, the debt ceiling continues to be at $18.5 trillion. They have to raise it. They think that there'll be a battle sometime in the Thanksgiving, U.S. Thanksgiving, over the debt ceiling. Also, as I mentioned, our featured diamond was this week a beautiful ring, a light blue ring. And one of the things we talked about on the last show, Harold, you had two very, very rare museum-quality special yellow diamonds. And for those that were wondering how quickly they would go, they went in a flash this week. We had an investor scoop up both of them. Congratulations. And you said that these yellow diamonds were the rarest of the rare that you have ever seen.
You bet. As rare as the vivid yellow flawlesses are, Randy, these were deep yellow flawlesses and very, very seldom seen. In fact, I've only seen a couple within the last 10 years, and they were just very special and went to a special client. So I'm glad they got a good home. They were both over 2 carats, and again, a tremendous find. But, you know, the thing is, Randy, you were 100% right about the markets this week. The markets were so volatile, and in a lot of cases, there was pandemonium. People really didn't know what to do with the volatility because, again, when these type of situations happen, and they don't happen often, but when they do happen, again, people get emotional. When these type of situations happen, you really have to think through what you're going to do and not be emotional about what you're going to do with your money. Because, again, for the first couple of days, the markets were just so volatile. As you mentioned, Randy, the Dow opened down 1,000 points, finished down 500 or 600 points on the day. In fact, over that period of time from the highs that we've seen in the Dow at around 18,500. We saw the Dow down about 2,000 points. It was trading actually right in around the 16,000 level. But we don't put a lot of credence in what the Dow Jones is doing at this point here because we know it's not reflective of what's happening with the U.S. economy. Now, I don't want to confuse you over this because I'm a Canadian living in the U.S., so I know what's happening in the U.S. economy. I've been in this business for 35 years, so I know what I'm looking at. But the fact is as bad as things are in the United States, and it's really not going to show up for a few years now, it's way better than it is everywhere else in the world. Look what happened with China. China, in a matter of a couple weeks, saw their stock market plummet by 30%, see all of their citizens who were leveraged in the market lose all of their money. Then they stepped in and stopped selling. They would not allow any major selling in the market. Then they put so much money back into the market that the market had its largest one-day move ever in history. And then the market resumed on its downward path. So that's basically what's happening with the Chinese stock market. Nobody's putting any credence in it. I've got some clients that are very large players in the Chinese stock market, and they were telling me that they were having a lot of problems getting their money out of the market. That's not conducive to investing. The fact is that when you're in that type of situation in a manipulated market, the chances is that the market could go your way for a while if you're following the trend. But when that market does start to fall, it can fall extremely fast, and that was obvious by what happened in China. Now, a lot of the volatility in the market was due to the fact that China was going through this, and again, the U.S. market reacted to it somewhat. However, the U.S. market did not get that hurt, and if it was left on its own volition, don't forget that there is a plunge protection team in the United States that tries to stop the market from falling too heavily. So at this particular point, the Dow did come down to around 16,000. I really don't see it going much lower than that at this particular point, and I don't see the Fed raising interest rates in September or October. I just don't see it happening because the U.S. dollar is still very strong. So what we also saw in gold was that gold rallied tremendously, and a lot of people got a false reading on the market. And when I say a false reading, again, don't get emotional. You got to sit back. Right now, the markets are so dangerous that if you make one wrong move, you could lose all of your money. And that's the last thing in the world we want to see happen. So now is the time to be conservative, and you got to step back and look at the market as a whole and understand why the market does what it does. And the simplicity of the gold market and what's happening in the United States and Canada is all very simple. As long as the U.S. dollar is strong, gold is going to go down. There is no doubt about that. We've seen that happen forever. Back in when we first started trading gold, when the U.S. dollar was the strongest currency, gold was all the way down to $250. In 2011, the dollar fell all the way down to 72.5 cents, one of the lowest prices it's ever hit, and consequently, gold was at 1,900. So there's a direct correlation between gold and the U.S. dollar. So at this particular point, what we saw with all the situations going on in China and the markets plummeting and closing the markets and intervening in the markets and everything, we saw a lot of volatility in stocks here in the United States, but we saw gold go from 1,080 all the way up to 1,160 in a matter of a week. So you saw basically an $80 increase in the price of gold within that period of time. And most people thought it was a flight to quality, but the fact is the U.S. dollar was falling for that week. In actual fact, last week when we did this radio show, the U.S. dollar was right at around 98 cents. This week, the U.S. dollar hit 93 cents. That's why gold dropped that's why gold rallied from 1,080 to 1,160. It made an $80 move because the U.S. dollar fell by about 3.5 to 4 cents. Now, for the rest of the week, the last 3 days, the U.S. dollar is back up to almost 96 cents. That 3-cent increase that we've just seen has pushed gold back down to a low of 1117. So from 1160 that we saw this week down to 1117, that's how far the gold market fell, just basically because the dollar strengthened. Similar situation with silver. Silver's up 21 cents right now, but silver fell actually heavy this week and fell down this morning to 1404, one of the lowest prices that we've seen in silver in a tremendously long time. So basically the markets are doing what we're anticipating. Listen, I want gold and silver to go up as much as you do, but the market's just not right to do it at this point here, and we've got to let the market do its thing in order for us, number one, to be able to get it as close to the bottom as we're going to get. And I'm very, very comfortable with the fact that gold is going to at least $1,000, and we're going to see it fairly quickly. It could happen within the next month or so. So the fact is that silver hit 1404 this morning. There's heavy support at $14. If we break $14 in silver, look for a short-term move to $13.50, but ultimately $12.50 is in the cards for silver. As far as gold goes, we're sitting right now at around $11.20. I'm anticipating that the U.S. dollar will continue to rally as it's the strongest and the only currency to look at this particular point. And I'm seeing that the U.S. dollar is not only eventually going to break par, and it's going to happen fairly soon, but it's going to go to 106 or 107. Now, as far as the Canadian dollar goes, don't forget the Canadian dollar is totally based on commodities because Canada is basically a commodity-based country. And the fact is that oil broke $40 this week. It went to $38, which pushed the Canadian dollar down substantially lower. And then on top of that, commodities are lower. So as long as oil is going to go lower, which it is, because we know that even though they're producing at a loss, because of the phenomenal deal that President Obama made with Iran, they lifted the sanctions against them, and the market has already absorbed the fact that Iran is going to be pumping some oil. They're going to be losing a lot of money, just like Iraq is, just like Canada is, just like the United States, just like Russia, Venezuela. Every other oil-producing nation right now is losing money. But the fact is they're pumping as much oil as they can to try to get some revenue in. When you're pumping this much oil, all you're doing is putting a lot more oil on the market that's already saturated. As much as you're going to hate to hear this, but oil's going to $20 or $25, and Saudis are losing a fortune. But they're borrowing money to shore up their economy because they're billions and billions of dollars in debt each month because of what's happening in oil. But they're not going to relent from this. They're going to continue to produce oil, and a lot of it, and they're going to flood the market until the United States and Canada and other oil-producing nations do what they're supposed to do. And Saudi Arabia, they think that they can pull this off. So bottom line is that here's where the money is going to be made. The money is going to be made in the United States at this particular point. As much as I dislike the U.S. stock market because it's so obviously how manipulated it is, there's no doubt that the U.S. stock market's going higher. The fact is that if the Fed was stupid enough to raise interest rates in September, they're going to stop it immediately because the Dow is going to fall substantially, so will mortgages, and they don't know what's going to happen with the derivatives market. The other thing is that why raise interest rates? The U.S. dollar is already strong and moving up anyways. Why do you need to strengthen the U.S. dollar even more? So the bottom line is the money is going to be made in the United States for the next while. I do see the U.S. dollar going stronger. I see that the stock market, the Dow in the United States is going to go higher, and I see other countries doing, unfortunately, horribly bad. There's no doubt that what's happening in Europe is going to get worse and worse. Greece is pretty well finished, but the next three are Italy, Spain, and Portugal, and they're almost as bad as Greece. The fact is that the euro is going to continue to fall, and everything is going to fall against the U.S. dollar. The smart thing to do is to get your assets into U.S. dollars, to get something into U.S. dollar-denominated investments. And those two investments are gold and diamonds. My Canadian clients that have bought diamonds from me for the past 10 years, even for the last 2 years, you picked up about 33% just on the currency alone. So you have an investment. If you have a diamond that you purchase from us, you have a diamond that is priced in U.S. dollars, and that's exactly what I've been talking about all this time. There was going to be currency devaluation and havoc in the market, and a diamond is the only calm market because it's not traded on exchanges like gold and stocks and commodities and everything like that. You need to get some money into U.S.-based assets right now because the Canadian dollar is going to fall substantially further. The Canadian dollar is going to fall to around 60 cents as the U.S. dollar goes to 108 or 109. There's an opportunity to make a tremendous amount of money, and we do have a couple programs here that are paid in U.S. dollars. So if you're not making money right now, and most people are not, if you're fighting for your life to try to stay alive in these crazy markets, you need to call me. I know what's happening in these markets. I've traded them. I've given you good advice for the last 15 years. And by far the best is yet to come. So if you're confused, if you don't know what to do and you don't know how to invest in these markets, call me. I'll sit down over the phone and spend as much time as you need explaining what you should be doing. So the bottom line is that if you're not in U.S.-based assets at this particular point, you better get in them very quickly, because you're going to find that your net worth is going to plummet as the Canadian economy plummets. Now, again, I'm not putting down Canada in any way. Randy will tell you, I'm the proudest person in the world to be Canadian. We talk about the Blue Jays and hockey every single day, and nobody's more proud to be Canadian than I am. But in all reality, Canada's in big, big trouble, and the currency is going to continue to fall. And there's no reason to sit back and all the hard work you do, let it go down the drain. Give me a call, and I'll spend as much time with you as you need, and I'll set you on the right track. And again, there's tremendous opportunities there to make money in alternative investments, where stocks and bonds and commodities are not good investments at this point. There are other investments out there that are very conservative but can get you where you need to go. So again, Randy, we're looking at an unbelievable situation. But the markets are doing what they should be doing at this point, and it's all based on what's happening in the United States. And if you're not in U.S.-based assets right now, you better get in them soon, because you're going to be doing yourself a tremendous injustice by not being on the right side of the fence.
Our featured diamond of the week from rarecoloreddiamonds.com. And remember, last week we had 2 museum-quality yellow diamonds, the rarest of the rare. They went very quickly during the week, and this diamond ring will as well. It is a beauty. It's a 1.30 carat cushion-cut fancy light blue ring. You can see it at rarecoloreddiamonds.com, featured diamond of the week. You can also see it in our free weekly newsletter. Connect with Harold, rarecoloreddiamonds.com, rarecoloreddiamonds.com, or speak with him personally and privately at 1-800-432-1022. Confused about plunging stock markets and obviously our Canadian currency going down? What can you do to profit and protect from what's happening in the marketplace right now? Harold will be happy to speak with you. 1-800-432-1022. rarecoloreddiamonds.com is the website, rarecoloreddiamonds.com. In our free weekly newsletter this week, Jim Grant, who writes the Interest Rate Observer, put it this way, and he's talking about prices of assets. The prices themselves are the cosmetic evidence of underlying difficulty. If you misprice something, it's not just that the price is wrong, it's the thing itself that has been financed by the price. So you have perhaps too many oil derricks, too many semiconductor fabs. We have too much of something, which is financed by an excess of credit or debt. That, to me, is the essential backstory to this morning's difficulties. And he's talking about the stock market plunging. It's the mispricing of asset values, led by central banks who think that by inflating or lifting up stocks, bonds, real estate, they will thereby engender prosperity. And really, that's what quantitative easing has all been about. Lifting asset prices so people feel wealthier and obviously have more confidence in the economy. And the truth of the matter is, it has not worked. One of the great quotes in our free weekly newsletter, and get our free weekly newsletter from Harold, get your name on the list, 1-800-432-1022, rarecoloreddiamonds.com, the website. Fred Hickey said, there's so much spin that comes out of Wall Street every day from hucksters who want this long-in-the-tooth stock bull market to continue forever. The financial media is no better, with most of them doing Wall Street's bidding, it's who pays them, and cheerleading the Fed's interventions because they're dyed-in-the-wool believers in central planning and big government. If I'm correct, and the central bankers are failing and likely to lose control, then we should see major turns in fortunes for both stocks, a continuation of the current sell-off, and gold, a huge rally soon. The paper gold speculators currently have off-the-chart record short positions based on faulty assumptions that money printing works, that the economy is finally improving, and that the Fed will be able to extradite itself from the zero-rate policies and bloated balance sheet box without blowing up the economy and the world. History is on our side. Money printing never works, and the gold paper shorts will be vanquished. A lot of people coming out this week, including Richard Russell, who's said, stay in precious metals and stay out of the stock market. I consider the Dow recovering from its low as the market churning and spinning its wheels. Over the next few weeks, the Dow should slowly sink and test its extreme low. The panic is over, but the losses will remain. This is typical action in a primary bear market. With oil under $40 a barrel, the world is deflating. When the Fed realizes what has happened, it will open the spigots wide, possibly leading to hyperinflation. The rest of the world's central banks will follow the lead of the Fed. What I don't know is whether we are headed to hyperinflation, but hyperinflation would not surprise me. Harold, we're in a time right now where people need to have alternative assets. They need hard assets. And we're talking about diamonds, gold, and silver. And we have just an outstanding featured diamond this week. It's a 1.3 carat cushion-cut fancy light blue ring. You can see it at rarecoloreddiamonds.com, featured diamond of the week. And Harold, we have about a minute and a half left in our segment here. But one of the things you said on an earlier show, if you're confused, call me. We will help you get through these tumultuous financial times. I know that's a standing invitation from you.
It certainly is, Randy. Again, we care about our clients and our listeners, and we always have. And if there's any way in the world that we can help, we will. It doesn't matter how much money you have. And in a lot of cases, when I speak to clients, I tell them not to do anything at this point here because maybe their net worth is not correct or maybe it's too risky for them at this point. So, again, the reason for the show has been on for 15 years now is to help you. And if I can help you by talking to you personally, by all means, I speak to about 30 to 40 people a week. And again, it'd be my pleasure to help you in any way that we can. These are very difficult times. Most people are confused. And again, if we can help, that's why we're here.
Connect with Harold at rarecoloreddiamonds.com. Speak personally and privately with Harold, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022, and ask about our featured diamond this week. It's a 1.30 carat cushion-cut fancy light blue ring. And we're going to talk about blue diamonds coming up in the next segment. And we have some exciting news that came out this week. There's a diamond index for rare-colored diamonds, and rare-colored diamonds did very well in the second quarter, in particular blue diamonds. We'll talk more about it, but go to the website, rarecoloreddiamonds.com, take a look at the featured diamond of the week, speak with Harold about how you can profit and protect the money that you have in the current financial times, geopolitical times that we live in, rarecoloreddiamonds.com, or 1-800-432-1022. Coming up, more of the World Financial Report on radio with Harold Siegel and me, Randy Marshall, right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 27th, 2015. Our time is 9:06 Mountain. Our radio show runs on 630 CHED in Edmonton. If you ever miss a radio show, we're on Sunday at 3. But if for some reason you miss us, the shows are streaming live, archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on radio. Our radio show is portable. We go anywhere that you do. And Harold is an open invitation for you to speak with him. Incredible volatility in the stock markets of the world over the last couple of weeks. And as we get into September and October, I suspect it's not going to get any better. September, October, known for incredible volatility. And we'll obviously know better what's happening with the Fed coming up in September if they do or do not raise rates. But we will see volatility. And if you're wondering what to do, how to profit and protect from what's happening in the world financially, geopolitically, speak with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Our featured diamond of the week is a 1.30 carat cushion cut fancy light blue ring. It is a beauty. You can see it at rarecoloreddiamonds.com. We have a picture in our free weekly newsletter as well. Now, there was a story that came out this week. Blue diamonds drive color index higher in Q2. The Fancy Colored Diamond Index rose in the second quarter, driven mainly by the blue diamond categories. According to the Fancy Color Research Foundation, fancy colored diamonds continue to outperform, showing price strength amid a backdrop of declines in their white counterparts during the second quarter. Based on a survey of more than 20 wholesale traders analyzed by the FCRF and reviewed by the accounting firm Citrin Cooperman, the index revealed prices of fancy colored diamonds across the pink, yellow, and blue categories increased 1% over April to July. The strongest performers included 1 carat fancy blue and 1 carat fancy vivid yellow, both up 4% each. Fancy vivid blue in the 3 to 10 carat range jumped 4 to 6%. A significant advance of 5 to 6% was noted in the 8 to 10 carat pinks, both intense and vivid. In most categories, the significant increase in prices was because of lower supply. Harold, it's good to see that we do have this Fancy Color Research Foundation, but also their index to give us a running total of how the rare colored diamond market is doing. And when you take a look at what's happening with plunging stock markets around the world, geopolitical trouble, if those people that have been listening to the show have invested in rare colored diamonds through your company, they must be very happy to hear this news, because they have an asset that in these tumultuous times is very stable and growing as we speak.
You bet. In fact, again, these diamonds have gone up tremendously. Blue diamonds in the last 10 years, vivid blues have gone up 1,000%. There's no other market in existence that does what the rare colored diamond market does. They're hitting records almost all the time. We really outlined to our clients how important yellows were, and the fact is that yellows are in the news every single day. The fact is they've gone up tremendously in value. I know that one of the rings that my wife has that I bought 5 years ago has tripled in price. So the fact is that with all the volatility in the markets today, it's great to know that there is an asset that does not trade on an exchange, so you don't get that volatility. You get a steady increase. And the fact is it's portable private wealth. And one of the major reasons why I've always recommended diamonds, certain diamonds, because not all diamonds are investment quality, is because of currency devaluation. And who would think that the currency that devalued the most, pretty well at this point, aside from Venezuela and Russia, those countries in trouble, would be the Canadian dollar. So my clients are the recipient of exactly what we just talked about. They bought diamonds when the Canadian and American dollars were even, and now the American dollar is 33% higher. 33% higher just on the currency alone, let alone what your diamond has made. Now, we put up as a featured diamond this week a blue diamond over a carat. It's magnificent. The fact is that blue diamonds are amongst the best investment diamonds you can get. Like I said before, vivid blues have gone up in the last 10 years about 1,000%. They've gone from 200,000 a carat to over 2 million a carat, and will continue going because there's very, very few of them around. A diamond turns blue because you need boron in the ground in order for a diamond to turn blue, and that can change the price of a diamond 10 times type of thing. So we're very, very excited about what's happening in the diamond market. The featured diamond this week is absolutely exquisite. Not only is a magnificent piece of jewelry, it was such a beautiful diamond that we had to put it into a museum quality setting. So the fact is that blues are going up substantially, pinks are going up substantially, so are yellow diamonds, and the next diamonds to do this are the greens. The green diamonds are in such tremendous demand at this time, and there's hardly any available, just like with the blues and the pinks. So the fact is that they're a longer-term investment, but now that the Argyle mine is going to close, where most of the pink diamonds come from, we only need to be in the market 5 to 7 years. The market's going to close in less than 5 years. That mine produces 95% of all the pinks, there'll be a tremendous shortage, and the prices will absolutely skyrocket. Now is an excellent time because you don't have to hold on to this diamond for 20 years. You can hold on to it for 7 or 8, put it away for retirement or put it away for the kids. But again, a vivid pink diamond, we anticipate, could go from 100,000 to $1 million in the next 10 years. That's how much we anticipate these diamonds to go up. Now, the fact is that diamonds are priced in U.S. dollars. What we've done is, because most of our clients are from Canada, and because we take very, very good care of our clients, and I do a lot of business in Canada, I've been hedging the Canadian U.S. dollar. And I've done that often over the last few years because of the amazing change in the Canadian U.S. dollar. So I've been shorting the Canadian dollar and going long the U.S. dollar, and basically we had some very large orders going into Canada. So I needed to hedge because the currency was going to be a problem if the U.S. dollar went up too much, and that's exactly what it did. Fortunately for us, we were correct, and we hedged the Canadian-American dollar, and not only were we able to complete the sale, but on top of that, we made a lot of extra money on the hedge. Rather than just keep it, what we decided to do is turn it over to our clients. So what we're allowing our clients to do in Canada only is to buy our diamonds that are priced in U.S. dollars in the same amount in Canadian. What it's going to do is put you ahead 30% right off the bat. So that means that if you buy any of our Argyle pinks, our yellow flawlesses, our blues, or our greens, what we're going to do is sell them to you in Canadian dollars, even though they're priced in U.S. dollars. And the only reason that we can do this is because of the hedge that we have on at this point, and we will be keeping on for the next few months. We do believe that the Canadian dollar is going to continue to drop because of oil prices, and the U.S. dollar is going to continue to increase. This trade alone could make you 40 or 50% just on the currency alone, let alone how much the diamond is going to go up in value. So if you're considering investing in diamonds, now is the time to do it, because we're going to put you into a position where you will be up 30 to 40% on your investment as soon as you buy it. And the only reason that we're able to do that is because we got very fortunate on a trade we made in the Canadian-U.S. dollar spread. And again, we made additional funds on it, and we're going to make it available to our Canadian clients only to take advantage of this situation. So if you're sick and tired of what's happening in these markets, if you're watching with fear and can't sleep at night because you're watching your money go down the drain, you're in the stock market, you're in the Dow and you're in the TSX, and you saw a 2,000 point drop in the markets, over the last few weeks. The fact is that if you're in paper assets, you're going to lose all of your money. We work so hard. We put away our money, we do the right thing, we take care of the family and the whole thing, and the fact is that we don't put as much time into our investments. We go along with the flow. We listen to a financial advisor that doesn't know what he's talking about. These markets right now, the paper assets, the stock markets are so volatile, you could lose all of your money. We've seen stocks go to zero. We saw General Motors go to zero. You've never seen gold go to zero, and you've never seen diamonds go to zero. You need to look at alternative investments, not the mainstream investments where everybody is going to lose their money. Just think about this. Back in 2008, the Dow Jones dropped from 14,000 to 6,500. Okay? Now, for every buyer, there's a seller. For every winner, there's a loser. That means that trillions of dollars were lost when the stock market fell from 14,000 to 6,500. That money doesn't just disappear into thin air. That money was made by somebody, by a group of investors that shorted the market and collected all the money from the people that lost on their long positions. And that just happened again. With the Dow dropping as much as 3,000 points, who do you think was shorting this market? There's people out there, could be the Bilderberg Group, it could be another group of investors that have a different idea as to which way the financial markets should be. And the fact is that when these situations happen and when the Dows and the stock markets around the world plummet, you don't see the hedge funds shorting the market. You don't see the mutual funds shorting the market. It's a group of investors that just sit there and prey on unsuspecting investors and scoop up all the money. I'm positive that 99% of the people that listen to my show has never shorted the market or never shorted a commodity. But the fact is that that's how certain investors sit back and make their money. It could be George Soros and people like him. But every time these markets fall, somebody is making that money, and it's in the trillions of dollars. And that money just doesn't disappear. When the real estate market fell, yeah, the money disappeared because it doesn't trade on an exchange with buyers and sellers like gold and silver and stocks and bonds and everything else does. So again, we are at a time when there are unscrupulous traders out there that make things happen in the markets. They're either governments or they're groups that do trade these markets, and they're the ones that are scooping up all your money. Don't let this happen to you. You know, as Canadians, we work so hard to support our family, to make a good, honest living, and to put some money away. We're mostly frugal. You know, we protect our money and we put our money away for the future. The bottom line is that if you're investing in paper assets, you're going to lose everything. And if you're in your 60s or 70s or even in your 50s, the chances are you're never going to make that money back. So if you don't know what to do at this point, you're totally confused and scared, you've got to get some money into U.S.-based assets, diamonds, gold, silver. Now, again, I feel gold and silver are going to drop further, and let that happen. We are pretty well ready. We're going to have our be able to actually sell physical kilo bars of gold within the next 60 days. And that should coincide with the lows that we're going to see coming up in the market. So again, we're here to help, and we're here to take care of you in the right way. You want to be in U.S.-based assets. That's diamonds mostly. Diamonds right now are doing phenomenal. Just like Randy pointed out, blue diamonds skyrocketed, pink diamonds, yellow diamonds, vivid yellow diamonds are going up so much in value, and they're almost impossible to get. We have vivid yellow diamonds that are flawless that we will sell to you in Canadian dollars, and you'll be up 35 to 40% the second that you buy them. And we'll ship them directly to you. You own them outright. Let us show you how to make money in the markets. We've got 2 or 3 programs here that are paid out in U.S. dollars that you can make a ton of money with us. So, again, just don't sit back and let these markets steal your money from you. These are called alternative investments for a reason. They're alternatives to paper assets, which is not where your money should be at this time. And this week was obvious enough that you do not want to be in the stock markets.
Well, I think the average person doesn't want to wake up in the morning and hear that the stock market is down 1,000 points and wonder, will I be able to retire? What will this mean to my retirement? And it's just a very unsettling feeling that people are just getting really sick and tired of. That's why it's time to think about and speak with Harold about alternative assets, diamonds, gold, silver. RareColoredDiamonds.com is the website. To speak personally and privately with Harold, 1-800-432-1022, 1-800-432-1022. Our featured diamond is a 1.3 carat cushion-cut fancy light blue ring. This ring will go very quickly. Speak with Harold on Monday morning. One of the little quotes that came in the story that we had, we mentioned earlier, blue diamonds drive color index higher in Q2. They say fancy colored diamonds are continuously demonstrating resilience and positioning themselves as a uniquely protected investment category strongly affected by dwindling supply. In fact, they go on to say that they really believe that as miners cut production later this year, the supply will continue to get tighter and tighter, which is a good thing for rare colored diamonds. And our featured diamond is a blue diamond, and we have 2 stories from the last couple of years. November 2014, a blue diamond owned by millionaire Rachel Bunny Mellon. She actually was a friend of Jackie Kennedy and landscaped the White House. It sold for a record $32.6 million at auction. You can read that story. Also in May of 2014, the diamond that is forever blue went for $23.8 million, setting a new world record. The largest flawless vivid blue diamond in the world sold for $23.8 million. The pear-shaped diamond named the Blue is a 13.22 carat and set a world record of $2 million per carat for a blue. And we have both of those stories in our free weekly newsletter, along with a picture of our featured diamond, which is the 1.30 carat cushion-cut fancy light blue ring. And Harold, I would encourage people to get that blue diamonds drive color index higher in Q2. there's a chart here, you'll really get an idea of the potential of these markets. And I don't think it could be said any better other than what they had put right here, that rare colored diamonds, uniquely protected investment category, strongly affected by dwindling supply. And we've talked about that for quite some time.
You better believe it, Randy. And again, it's happening right in front of our eyes, and we need to take care of it. The blue diamond, the light blue diamond that we put up, a 1.3, which is a huge diamond for a blue especially, again, we'll sell that in Canadian dollars. You'll be up, 30 to 40% on that, let alone how much that diamond will go up in value. So there's great opportunities. We don't have to sit here and be beaten up by these big money traders that are trading the market where we have absolutely no control. We have to take control of our life back. We have to take control of our financial life and make our own decisions, because the fact is, when other people make decisions for you, 90% of the time they're going to be wrong. You've listened to the show in most cases now for 15 years. The majority of recommendations we made have been spot on. I've been in this market for 35 years, and again, I've been through a lot of these extremely volatile situations. I know when to be aggressive, and I know when to sit back and let the markets come to us. And again, at this point, we do not want to be aggressive. We don't want to speculate. We don't want to leverage. We don't want to finance. We don't want anybody else to hold our goods. We want to be in control of our investments. And again, I feel that my clients, when all the dust settles, will be way ahead of everybody else. If you're sitting in paper assets like stocks, bonds, and those type of investments, you're going to lose your money. You saw a preview of what happened this last week.
Speak with Harold about investing in rare colored diamonds. RareColoredDiamonds.com, 1-800-432-1022. Our featured diamond, 1.30 carat cushion cut fancy light blue ring. See it at RareColoredDiamonds.com or in our free weekly newsletter. And what's happening around the world is not only very unstable stock markets, but the oil market is getting to be a huge concern. Some of the stories in our free weekly newsletter: Saudi Arabia seeking advice on cutting billions from its budget in the wake of the oil crash. Also, how much longer can Saudi Arabia's economy hold out against cheap oil? Oil's drop puts spotlight on Saudi Arabia. Some OPEC members call for renewed discussions within the cartel about restraining production. Also, I was reading a story this week that Ecuador is pumping oil, but they're doing it at a loss. Also, from Venezuela to Iraq to Russia, oil raise fears of unrest. Oil, the lifeblood of many countries that produce it and sell it, appears to be rapidly turning into an ever cheaper economic curse. A year ago, the international price per barrel of oil was $103 by Monday, and obviously it's below $40 now. The price was $42, roughly 6% lower than on Friday. And this is obviously going to create major problems for countries that need money. For oil producers, cash is king, and that's why they can't stop drilling. So you can see a whole host in our free weekly newsletter of stories all about the oil market and the difficult choices and decisions that will have to be made if oil continues to go lower. And Harold, in some countries, you could potentially see social unrest, civil unrest, because it is a situation where people are counting on the money that the governments have promised them, and if the oil money's not coming in, there could be serious problems.
Oh, yes. There's no doubt about that. You're going to see that in Venezuela for sure. Venezuela is finished. Their currency is worth almost nothing. And in Russia, they're not far from it. So the fact is that these countries cannot continue to produce oil at such a huge loss. And in some cases, it costs $80 to produce a barrel of oil, and oil's below $40. So mathematically, how long can you continue to do that? And there will be civil unrest, and will start in those countries like Venezuela and areas like that. Even in Iran, because Iran has gone through years and years of sanctions against them, and even though some of the sanctions have been lifted, it doesn't mean that the price of oil is conducive to them making a profit. In fact, it isn't. So there's no doubt in my mind that oil is going lower. It's going to go probably into the $20, $25 range till Saudi Arabia can prove their point. And then there will be a point, believe me, there will be a point when oil goes back to $100. Oil is not going to stay at these levels forever. We're in an oil war right now. And again, let them fight it out, and we'll be the winners of it. We'll buy oil when oil's down at $20, and I'll show you how to do that, and we'll ride it right back up again. So all in all, the volatility in the market is not for us. We don't want to be in those markets. You don't want to have sleepless nights because you're scared to death that your stock positions are going to be worth next to nothing like they were back in 2008. Give us a call. Let us sit down and help you and direct you in the right way.
Profit and protect the money that you have in the current environment that we're in. As we have said before, and this was attributed to Rick Rule from Sprout USA, invest in things governments cannot print. They cannot print diamonds. They cannot print gold and silver. Invest in hard assets. The monetary world, the fiat currency world, is just really literally about to explode. And if you want to get into a hard asset, speak with Harold, rarecoloreddiamonds.com. A 1.30 carat cushion cut fancy light blue ring is our featured diamond of the week. Speak with Harold personally and privately, 1-800-432-1022, or connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. And it was interesting to note that in the United States this week, we keep hearing about how great everything is. There was a town in Kentucky that filed for bankruptcy. And it joined Detroit, San Bernardino, also Jefferson County in Alabama as different municipalities that went bankrupt. One of the other stories that was quite interesting, and as you know, one of my pet issues, is debt and the United States, the debt that they're in. The Congressional Budget Office reports, and they're saying the United States, unsustainable debt in the long term. The economy is sluggish but growing, and inflation remains low, painting a decidedly mixed picture for the federal government. The CBO reports Tuesday saying the fiscal situation is improving this year, but will snap back by 2018 to swelling deficits and unsustainable debt. The debt ceiling, and this has gone on for months and months now in the United States, is stuck at $18.5 trillion. The next debt ceiling battle may get pushed back to Thanksgiving. One of Washington's upcoming fiscal brawls may be pushed back as far as late fall. And there is incredible concerns about the battle as the U.S. elections loom, obviously, in the United States. You see all the potential presidential candidates trying to get the nominations for their individual parties. And you can bet that the debt ceiling fight could get very, very nasty. And it's something to watch out. It'll add further fuel to the fire of what's happening in the financial markets with all the instability. And it's a concern that somebody, and obviously all investors, should be aware of. Harold, we really encourage, and we have about a minute left here, we really encourage people to speak personally and privately with you, not only about investing in gold and silver and diamonds, but hard assets and why people should be in them in these economic times.
You bet. But I think it's getting pretty obvious to people at this point here that these markets are not for everybody. Most people that trade stocks lose their money. So the fact is that there's better long-term investments than putting your money in a mutual fund. There's better short-term investments than trading stocks type of thing. So give us a call and let us see if we can possibly help you. But again, if you're confused about what's happening in the world today and concerned about the volatility and what's happening with your investments, we're here to help. That's all I can say. All we want is for our Canadian clients and listeners to our radio show to come out of this doing well.
Last week, Harold had 2 museum-quality yellow diamonds, the rarest of the rare, and they went very, very quickly during the week. The same will happen with our featured diamond. It is a 1.30 carat cushion cut fancy light blue ring. If you'd like to learn more about blue diamonds, we'll be happy to send out information to you. But connect with Harold at rarecoloreddiamonds.com or call him at 1-800-432-1022 about our featured diamond. Thank you very much, Harold Siegel, for your knowledge on a very crazy week in the financial markets.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.